Hey y'all, this is Dominique Young, and I am here with another video to communicate some things about taxes because this is tax season. So, as I stated in the last video, January 18th was the first day for you to be able to file your tax returns. So, some people, when they file their tax returns, they actually receive a refund. And so sometimes it may seem like you are owed a refund or you should expect a refund every year. However, I'll discuss what an actual tax refund is. So let's start. So why do we even have to file taxes? Well, it is in the Constitution that the federal government can levy taxes. So what you actually do is you pay little by little each paycheck to the federal government of what your estimated taxes are for that year based off of your income, right? So your gross income is any income that has come into you that meets the definition of gross income. And then your credits, deductions are taken out of that gross income, and that would essentially be your adjusted gross income. Your adjusted gross income is compared to a tax table, and based off that tax table as to what your adjusted gross income is determined to be, there is a set amount that you are to pay. That is your tax liability. Now, how do I get to the refund? Okay, so if what you paid in withholding through every single paycheck or whenever you pay your estimated taxes, if your withholding, credits, and deductions is more than the taxes that are owed based off your adjusted gross income, then you'll get a refund because you essentially paid too much during the year. So the federal government is going to return that money to you because the federal government cannot keep money that does not belong to them. And so essentially, when you reconcile what you have paid with what you have actually earned, with what the IRS has determined that you have actually earned, if you pay too much, then that money is going to be returned to you through your tax refund. So if what you have paid in withholding, your credits and deductions is more than the actual amount of taxes that are owed based off your adjusted gross income, and then you'll get a refund. Now, even if your withholding and your credits and your deductions, that could still be more. However, if the credits that you are using to lower your tax liability, if they are not refundable credits, then you won't receive that money back. If the credits are refundable, then not only will it lower your tax liability, you also will get a refund for the credits that you've used to the credits that you use on your tax return. So that essentially what a refund is. It isn't the overage that you have paid based off your withholding, your credits, and your deductions being returned to you because you essentially paid too much during the year. So those are the people that are actually going to get a refund. So it's not the expectation for you to get a refund. Some people actually zero out every year. And so some people that's what they aspire to do. They do not want the refund. They just want to pay exactly what they are supposed to pay during the year and then zero out come tax time and then be complete with their tax obligation for the year. Now, those that did pay too little during the year, then you will have to remit the difference to the IRS. So when are you going to get your refund? So 9 out of 10 people can expect to get their tax refund within 21 days of your return being submitted to the IRS and being approved. And this is if you e-file. So you would have to e-file your tax return and have it be submitted and approved by the IRS in order for you to get your refund within about 21 days. And then they also have the e-file tracking status on irs.gov. You have to wait about 24 hours to be able to see the status of your tax return. However, you can, after 24 hours, go online and check the status, and they'll let you know when you should expect to receive your tax refund. So as we discussed credits earlier, there are two credits that will cause you to have to wait until later in the year to receive your refund if you elected to choose to apply those credits to your tax return. If you elected to use the earned income tax credit or the additional child tax credit, then you're going to have to wait until after February 27th in order to get your refund direct deposited into your bank account. So you would have to file online, and then you have to file online, request direct deposit, and have no issues with your tax return for your refund to be placed into your bank account on or around February 27th. So you have to wait a little bit if you use those two credits. And if you did not use those two credits, then you can expect to get your refund direct deposit into your account within 21 days, which is about 3 weeks. So now that we've discussed how you get a refund and when you should expect to get it, let's think about what you can do with your refund. You know, everyone may not want to just, go on like a shopping spree or take a vacation with their tax refund. There are some things you can actually do to assist you with your financial planning and with your finances with your tax refund. So there are 3 things you can do. Remember I said in the last video that we were going to be focusing on 3s because this is the firm's 3rd year in existence. So the first thing that you can do is you can get caught up on past due bills if you have any. Remember, we just got out of the Christmas season, so you may have credit card bills that you racked up during the Christmas season. So 61% of Americans are in credit card debt, and they carry an average of $5,875. 23% go deeper into credit card debt every month, and 14% say they missed a payment in 2023. So if you are looking to lower your debt to income ratio because you're looking to obtain a mortgage to purchase a home this year, you can use your tax refund to pay off credit card bills and lower your debt to income ratio so that you are more likely to get approved for a mortgage and be approved on more favorable terms because your credit report shows that you are not carrying too much debt according to the income that you actually receive. The second thing that you can do with your tax refund is that you can get a head start on your Roth IRA contributions. A Roth IRA is different from a traditional IRA. With a Roth IRA, you fund the account with after-tax dollars, meaning that the taxes have already been taken from the money that you are investing into this account. So, for example, if your gross payment for this pay period is $15,000, your net income will be $9,938.47, and that is the money that you will be able to use to fund your Roth IRA. Now, the thing about a Roth IRA is that because it's funded with after-tax dollars, you don't get the deduction that you would normally receive with a traditional IRA. So what happens is the money is already been taxed on, and so it goes into the account, and then once it's taken out, it's not considered gross income according to the Internal Revenue Code. So the fact that this refund is money that you have already overpaid, so the taxes have already been taken out, just like when you would normally contribute to your Roth IRA with your net income. So you don't get the deduction. However, it's also not included in the Internal Revenue Code's definition of gross income when you take it out after you have turned 59 and a half. So your refund is a great place to invest that money since you don't get a deduction for contributing to this IRA. When the interest is accumulated and the principal are distributed, that accumulated money is not included into your gross income. For this money, this refund money, not only are you, have you already paid taxes on it and it is extra, now you are actually you don't actually have to pay taxes on the accumulated interest when you take it out. So after you turn 59 and a half, that money isn't taxed because that is what it's not considered gross income according to the Internal Revenue Code. And so all that extra money that you allowed the government to hold on to during the year is returned to you, and you just place it into an account to earn interest, of which you don't pay taxes on when it's distributed. And so for a Roth IRA, there is a limit on how much you can contribute every year. If you are a single filer, then you can contribute up to $15,000 a year. If you're married filing jointly or married filing separately, then the most that each person in the marriage can contribute is $10,000. So for the two of you, it will be $20,000 a year. So if the average tax refund is over $2,000, you can buy yourself something nice and then place the remainder in a Roth IRA for accumulated interest, because you weren't using the money anyway. So you might as well put it away again and let it earn interest this time. So that extra money that you receive back for your tax refund, you can go ahead and put it into a Roth IRA for the year and then have a nice non-tax retirement to live on after you turn 59 and a half. The third thing that you can do, which is my favorite thing, is you can start a business. If the average tax return is that in 2022 was $2,753, you can actually use that tax refund to start your business, because there are fees associated with starting a business. There are things that you have to pay to the state, and then there are things that you pay to private vendors to help you run your business. So if you have a business in Florida or Georgia, or you live in Florida or Georgia, then you can request this brochure from my firm, and it will delineate the steps that you should take to start a business and the estimated costs of starting a business in Florida or Georgia. Now, the reason why I've limited it to Florida or Georgia is because that's where I'm licensed, and business law is a state issue. So I am allowed to counsel regarding a business if your business is in Georgia or Florida. It doesn't mean you have to be there. It just means that your business has to be a resident of Georgia or Florida, right? Or there are other circumstances, but it just needs to be Georgia or Florida. Now, so according to what I have calculated to be estimated startup costs, it's really only about $322 to $470 to start a side hustle in Florida. If you want to start a side hustle in Georgia, it's about $232 to $323 in Georgia. So the brochure will delineate how I got to those amounts. However, if your tax refund is, about $2,000, not only is that enough money for you to buy yourself or someone else something nice, hint, hint, Valentine's Day, you have the money to do something nice with your tax refund and also build a business so that you can continue to have that extra money to buy yourself something nice, put it into your retirement. You can also, if you have any outstanding debt, use that additional money to pay down that debt so that you have a favorable debt to income ratio. So, based off of that information, this is a good time to go ahead and get started, especially if one of your resolutions was to get a handle on your finances or to get ahead in your financial situation. Sometimes starting a side business is one way that you can bring in the additional income that you want to be able to get ahead in your financial situation. And so if you request the brochure and you receive it and you're like, hey, I still, need some more information. However, I'm not sure that, I can afford an attorney hourly rate right now. I do have a book that is coming out soon that I'm actually finishing now. And it will actually go further into detail what it's like to actually start a business. It'll go from which entity you should choose, or help you choose the entity that you want for your business. It goes into the taxes that you would essentially have to pay for your business and for your employees. It discusses location, branding, and some other issues that pop up that you may not actually think about when you are starting a business. So when that book is actually finished and I've actually published it, I'll definitely let you all know, and then you can actually order it. So if you've made a New Year's resolution to start a business, or to get better in your finances, then tax refund time is the perfect time to use that anticipated extra money, to invest it and put it to good use, to place yourself in the situation that you want to be in financially. So if you have any questions regarding taxes or starting a business in Florida or Georgia, feel free to call the firm. The number is 866-823-9572. Again, the number is 866-823-9572. Or you can click on schedule a consultation on the firm's website at www.dominiqueyounglaw.com. Again, that is www.dominiqueyounglaw.com. Thank you.